The markets of the last 20 years are very different than the previous 140. They just are. And that's because technology has moved the incremental investor away from Wall Street onto Main Street. And not just Main Street US, but Main Street Russia and China and Israel and everybody else.
In a recent interview, Mark Yusko, the founder, CEO, and CIO of Morgan Creek Capital, delved into the fluctuating state of the financial market and the current condition of Bitcoin. Within the financial market, there's a cycle of ascending and descending trends among global currencies. Stocks recovered after their most challenging week since March. Treasuries faced a decline following comments from a Federal Reserve representative suggesting the potential for prolonged higher interest rates to manage inflationary pressures. Yusko emphasized that this situation has repercussions for Bitcoin. While Bitcoin's value remains steady when measured in Bitcoin terms, it fluctuates based on the underlying asset in which it is priced. The cryptocurrency market has remained relatively calm with few outliers. Bitcoin price continued to hold a crucial support level of around $29,000 on Monday, with most experts calling for a further decline in the coming weeks towards $24,000. During the interview, Mark Yusko highlighted how the markets of the last 20 years differ significantly from the previous 140 years. He attributed this contrast to technology shifting investors from Wall Street to various main streets globally. Rating agency Fitch on Tuesday downgraded the U.S. government's top credit rating, a move that drew an angry response from the White House and surprised investors, coming despite the resolution of the debt ceiling crisis 2 months ago. Fitch downgraded the United States to AA+ from AAA, citing fiscal deterioration over the next 3 years and repeated down-the-wire debt ceiling negotiations that threaten the government's ability to pay its bills. Recent analysis shows global stocks ticked lower on Tuesday and bond yields dropped as investors assessed the latest weak economic data out of China and looked ahead to a key inflation reading from the U.S. on Thursday. During the interview, Yusko pointed out that bond prices decreased due to an abundance of supply and constrained demand. He noted that if this pattern continues, which appears probable given the continuous government expenditure, it could lead to a sense of concern arising. Let's direct our attention to the video. But before we do, please ensure you've subscribed to the channel and activated the notification bell for future updates.
All central banks are facing the same problem. And it's a problem of their own creation. And it's, I will argue, an intentional act, not an unintentional act, because governments, as they consolidate power, spend. Why do they do that? Well, because it's profitable for them and their cronies. And, I was amazed. I actually was amazed by this, that I think it was Mitch McConnell actually said on television, don't worry about all this money that's going to Ukraine. It's not going to the Ukrainians. It's going to us. It's going to our companies to, buy bullets and bombs and stuff. So, wow, he just admitted that it's just graft and corruption. So that proclivity to spend isn't going away. But here's the little problem, and Lynn Alden pointed this out, and I don't know if she sourced it or if she took it from someone else. It doesn't really matter, but she's the one that I'm stealing it from. U.S. tax receipts just plunged to the lowest level ever. Now, not in dollars, but in rate of change, and that is bad, right? Because if you're spending too much and you're not bringing in enough revenue, what happens? Well, what Fitch says, in theory, you could default. Now, they're not going to default because that would be disastrous if the global risk-free asset suddenly had risk. But I think it means a lot of things for global currencies. I think are going to continue to weaken. Therefore, it actually has implications for Bitcoin, which, remember, Bitcoin doesn't change. One Bitcoin is one Bitcoin. It's just the price that we price it in changes. The asset that we price it in changes. And those are all, I think, going to get worse. probably way back when in history there may have been something, but no, it's not normally seen as an option. Therefore, the idea of downgrading from AAA to AA kind of seems odd. On the other hand, basic supply and demand, right? The price of those bonds is falling because there's excess supply and limited demand. And if that trend continues, which it appears that it's going to at the rate that our government keeps spending, I think it's not a full on panic yet, Mike,
Yeah.
but it could turn into one, and panics can get ugly in a hurry.
When Wall Street gets whipsawed, investors often turn to an assortment of economic data points, probability tools, and other metrics to offer clues as to which direction stocks will head next. Based on backtested data provided by Reventure Consulting CEO Nick Gurley, when examined with a wide lens, M2 has been steadily increasing for more than 150 years. Governor Michelle Bowman said on Saturday, the U.S. Federal Reserve will likely need to raise interest rates further to bring down inflation. During the interview, Yusko likened the present condition of Bitcoin to a ride on a roller coaster. This comparison is fitting due to the ongoing struggle between the expansion of M2 and the challenge of increasing long-term interest rates.
When crypto broke and everything broke, and we went into this, basically, like you said, the market is a leading indicator. The market knew that 2022 was a recession. The market declined 20+%, right? That's what markets do when there's a recession. And so the market told you that there was a recession. Now, the market also told you that the recession was over and that we were recovering, but then it accelerated. And now we've had no increase in earnings. We've had no increase in E, but we've had a massive increase in P. And so our PE ratio, our multiple expansion, has gotten to levels, again, that are just in Stupidville. And how long can they stay in Stupidville? Longer than, the rational person can remain solvent, usually. My interpretation is that the Bitcoin is in this roller coaster while I wore the socks today, because we have this tug of war going on between the expansion of M2. So we're quietly not doing QT like we said we were. And so we're expanding the balance sheet again. We're lending money to these banks to keep them solvent, yet another one goes bankrupt, it seems like every week. And that's going to continue, particularly if the long rates keep going up. Those unrealized losses will become realized at some point, and more people are going to have to raise equity. So the banking problem is probably not over. And you've been talking about that, for months. So, but the other competing force is that the Fed, looking at this data, is like, geez, I got to keep raising freaking rates.
Yeah.
And if you raise rates, in theory, that contracts money supply. But that's the part that people are missing, is rates have risen a lot. But you showed the chart. Money supply is going up, and it's partly monpol, but mostly it's fiscal pol. And it's that 1-2 punch where we're just flooding the system.
The financial markets are in a state of flux. Fitch downgraded the U.S. government's top credit rating to AA+ from AAA, citing fiscal deterioration over the next 3 years. Bitcoin's price is likely to continue to be volatile in the coming months. The ongoing struggle between the expansion of M2 and the challenge of increasing long-term interest rates will likely keep Bitcoin on a roller coaster ride. This concludes our discussion for today. We encourage you to share your views in the comments section. If you found this content informative, please give it a big thumbs up and subscribe to our channel for the most up-to-date news and videos. We appreciate your input and look forward to hearing from you again soon.